After yesterday's scare with Evergrande, markets have settled today, and although the Japanese Nikkei index is still down, most of the markets have sort of bounced back as if nothing's happening. Meanwhile, the Evergrande situation in China has not been resolved yet. We don't know whether China is going to bail them out or try and restructure their debt. So we really don't know what will happen there. What we do know is that 1 million people have paid deposits to them, and they haven't had their properties yet, and some of these people are unlikely to see their deposits again if the company goes down. In fact, if the company goes bust, then they won't see the deposits again, but that could have a much wider effect in the Chinese economy. But if the government does do something with Evergrande, does that really solve the problem? I don't think so, because I think there's a lot more companies out there like Evergrande that have taken deposits from people, not got the money to finish the properties, and they're just taking more and more deposits, more and more schemes, and then those deposits they're robbing Peter to pay Paul, like in a way a bit like a Ponzi scheme. It's not a Ponzi scheme as such, but it's structured in a way of a Ponzi scheme. I mean, I call the state pension a Ponzi scheme because they are taking money from people when they're 20 and 30 and hoping that, when they retire, the people who are then 20 and 30, that they will be enough money coming into the system to pay those out when they retire. For instance, I've been paying into the system all my life. I haven't got a pension scheme with my name on it. I haven't got a fund there with Charles Kelly's name on it. I'm relying on young people to pay national insurance now to fund my pension when I eventually get there. So that is pure and simple the definition of a Ponzi scheme: taking money from people, using that money and hoping that there'll be more new money coming in to pay for the scheme. Now we know that China has partly the government have partly precipitated this problem by saying that companies have to reduce their debt liabilities, and they've also got an aim to make property more affordable for the masses. At the moment, the speculators are coming in and driving up the price of property to crazy levels in big cities in China. And on the back of it, companies like Evergrande have expanded very fast. They've got 300 billions worth of debt. They've got debt repayments due this week, which are unlikely to be met. And the system's just got out of control. I think the government have tried to dampen it, but in doing so, now the first big company has stumbled, and that's Evergrande, but there might be a lot more out there. It's difficult to know what's going on. There are these sort of ghost cities in China, apparently, where they've built massive skyscrapers that nobody's living in. Maybe people have bought them and hoping that they'll go up. I don't know. The other thing about speculators is that when they buy off-plan properties, a lot of people are rushing to buy them in the hope that they will never have to complete on them. They'll never have to eventually buy them and fully buy them. They put a deposit down on them, and then they're hoping that they will sell those units off when they come to completion, and that they can be sold off to the end user, if you like, someone further down the food chain. And that's quite a dangerous strategy. It works when the markets are rising and everything's tickety-boo, but it doesn't work when there's a problem, and this is where there's a problem. We've even heard of suppliers to Evergrande been offered unfinished buildings in return for millions of pounds worth of materials and goods. But would you want that? I mean, if you were owed money by somebody and said, well, I'll give you this half-built house, how do you value a half-built house? You've got to then spend more money on it to finish it. And then we possibly have a falling property market. But perhaps these people have got no problems, no choice. I mean, employees apparently are not getting paid. So it's a big mess there. And the question is how this will affect the rest of the world. Well, the markets today seem to have just gone back to normal. They've kind of bounced back. FT 100 index is up slightly. The Nasdaq, the US Dow Jones, Nikkei is still down. Hang Seng in Hong Kong is even up, but I think the Chinese and Taiwan market haven't opened yet. There's a holiday, so we will see what happens in a few hours' time. The other problem is that we have, it's certainly in the West, is inflation. The central bankers have said, don't worry about inflation, this is a temporary blip. But now the OECD, which is a policy forum based in Paris, has warned that inflation could remain higher for 2 years. Well, it didn't take much to work that one out. We know that prices are going up left, right and centre. I was in a shop yesterday and I thought, this is a bit more expensive. And then you pick it up and think, hang on, I'm sure they've reduced the package size, and they have. When you check it, they've put the prices up and reduced the packaging size. So you're getting hit at both ends. They want to make it look like everything's back to normal, but the size of the goods has reduced. You might say it's a con, but they're just doing their business. I'm not going to blame them. But in the UK, we've had this. We've also had this energy crisis. Some suppliers of gas have gone out of business. Don't worry, because that will be taken over by a new supply, but you might have to pay more. In my previous podcasts and in my Smart Money Manager calls, I always warn people that they should not stay with one supplier of anything for any longer than they have to. They should be shopping around for better deals, and one of those is on energy. And try and get a better deal, and particularly now, because there's going to be a massive price rise coming with the price of natural gas going up even before this crisis. So we could be in for a long winter in the UK, and we know that inflation is high in Germany as well, and in America. So what does inflation mean? You hear this word inflation. Well, if you haven't lived through periods like the 70s and 80s, and then you're probably not worried about inflation. You think, well, inflation at 2-3%, who cares? But I lived through inflation when inflation was at 15%, 20%. And that's a huge burden on people's savings, because it means if you leave money in the bank this year, if you've got £1,000 in the bank, or let's get a bigger figure, let's say 100,000 in the bank, and you've got a 20% inflation, then that £100,000 will only buy £80,000 worth of goods the next year. Now, a lot of people feel that the official inflation figures are not really telling the whole story, and inflation is nearer to 5%. So in that example, 100,000 in the bank, you leave it there, you're earning zero on your savings, so the buying power of that money has gone down to 95,000 the next year. Now, it's a bit like the rich getting richer and the poor getting richer, because if you own assets, then asset prices tend to go up during periods of inflation. So property could go up in periods of inflation, and we've seen shares go up in periods of inflation, but it can't last forever. And that's my concern, is that the bubble eventually bursts and it all blows. So we will have to see what happens in the next coming weeks, coming months, to see how China deals with this issue, and how inflation will possibly send the stock markets down if it becomes a worry. So we shall see. In the meantime, governments are just printing and printing. They can't just keep printing, can they? Or can they? We said that before, but they've printed trillions of dollars and pounds and euros. That's got to be paid back somehow. And we've already had higher taxes in the UK. So look, there's a lot of problems out there. Just get yourself financially educated, so you learn and know what's going on in the financial world. You don't have to be a genius, but just read a quality newspaper every day, a Wall Street Journal, the Financial Times, the Telegraph, that sort of thing, the Times. Read those every day, and if you don't want to buy it, go to your library and read it. But you have to really, if you like, know what's going on. You've got to be aware of what's going on in the world, or go on to YouTube, look at some of my videos on money tips, look at what's going on some of the TV channels that cover finance, but try and educate yourself. I'm offering a free webinar where you can learn how to master your money the smart way, and learn all about finance. And this is what I've picked up in my 25 years as a financial advisor. I'm not a financial advisor now. I'm not giving you financial advice directly now, but what I've learned in that field, working for banks, insurance companies, working for lenders, is what it's like on the inside. And that's given me a tremendous advantage in life, learning that information. So check out my courses and my free webinar, free training, where you can learn how to master your money without working any harder than you are now. Thanks for listening, and keep learning out there. Never stop learning.